Welcome to the Stock Option Assassin's free trade of the week. My name is Eric and today is Thursday, August 20th, 2015. In this week's edition of Trade of the Week, we're going to take a look at the bloodbath in the Disney chart and also see if there are any opportunities here. And if you haven't done so already, be sure to subscribe to our YouTube channel and like us on Facebook for more technical analysis videos and strategies. So today, Disney continues its plunge after its earnings drop. I think the big fear on earnings a couple weeks ago was that media companies are going to have a harder time making money given all the different content sort of bundles and distribution channels that are kind of coming out there. So Disney kind of had this warning. They took a beating. A lot of media stocks took a beating, and they continue to plunge as the entire market is really down today. Disney's, I think this is oversold, overdone. I'm not sure if this is going to be the low today, but I think we're coming into some key levels and some key sort of technical areas that for me as a contrarian person, I think that we can start nibbling on Disney stock here. So first thing I want to sort of look at is back in February when Disney reported earnings, they had a gap up, and basically we're right, as of today, we're coming in almost to a gap fill level. So this is a logical support area that we need, that you can actually trade against for a scalp trade. I'm looking to get into Disney more of a longer term trade, just because they still have a lot of things on the horizon with the new Toy Story theme park, the new Star Wars land thing that they're doing. And so I think that this company is not going away. I think it's especially getting caught up in the overall market sell-off. By the way, as I'm doing this video, the Spiders is down almost 1.5%. So there's a global sell-off really happening right now. And I might nibble on this today. I'm looking at the price level of 100. I might pick up a little bit at 100. But not only are we headed into this gap fill, or gap window, excuse me, you also have a gap fill down here at around 94 and change, about 95. So, so these are two, would-be support levels. So if 100 doesn't hold, I think 95 does hold over the next week or two. Obviously, if the overall market, really takes a dive, then that could change a little bit. But my plan for Disney is this. So I want to leg into Disney in or at around 100. And maybe that's today, and maybe it's not, maybe it's tomorrow. And then, kind of have a starter position here. I'm going to leg into this down to 95, and then, place a stop closer to maybe like 90 below this low here, like 89 and, 89.50, something like that. So, I know it seems like we're kind of catching the falling knife, but this isn't a stock necessarily that's gonna go away. Like I said, their earnings are doing well. I do want to point out a technical thing that's sort of giving me a little bit of a little bit of confidence that maybe you can step in here between this 95 and 100 range, and that is the DMI oscillator. It's one of my favorite indicators, and I'm zooming out a little bit. I want you to look at where the oscillator went, and what this oscillator does is basically measure sort of the selling pressure and the buying pressure. So there was kind of this exhaustion selling here back in October of last year, where we had a low of 78.50. So that was sort of the low back then, and the oscillator itself reached a level about minus 46. Okay, so I'm putting a line on the chart, putting a line on the indicator as well. So when earnings hit, we got a huge gap down, all that stuff. That can skew the indicator a little bit. So I wouldn't necessarily buy that dip because it's kind of on an earnings thing. But as we started to sort of base down here, and now the sort of selling is picked back up, we're headed back into that level, that negative 46 area. And not only that, is our DMI stochastic is going to be oversold as well. So what I'd really be looking for more of a short-term bounce signal is for both of these things to get oversold, which with today's move, they'll likely be really oversold tomorrow or Monday. And then as soon as you get a little bit of a tick up, then I would look at getting my first position here in Disney. And then obviously if it if you can hold that, that's great. If not, then I would leg back, like I said, around 95. So, I don't recommend buying this today, although, it's very tempting to buy a stock like this when it's down this much. But given the overall market, I suggest you wait, but I will take this buy signal on the extreme level that the oscillator did. So probably needs a couple days for that, but that's my trade. I would look to hold on to this a little bit longer, get in around 100-ish, add to it around 95-ish, and then if the market, really just gets crazy, then you can place a stop around 95, or I'm sorry, 90, right? So that's the trade of the week. I hope you guys enjoyed it. Have a great week, and I'll talk to you at the next video.